Hi everyone, it is Sunday the 2nd of August 2020. I'm having a look at the global indices and starting off with the Wall Street, or the Dow, sorry, Wall Street Dow. And so looking at the last few days, we kind of hit it a bit lower down, sort of appeared to find some support on a previous level of resistance, bullish price action towards Thursday and Friday. I think what's interesting about this is a kind of a collapse through that, or at least a fall through that level of support, a recovery back over it. Next day, a fall through it, push back. Okay, so the problem with that is there's clearly enough buyers below this level, but the fact that the market had to keep testing through that level, not a great sign. So that's just my kind of basis for a bit of caution this week. Obviously, this year I've spoken a lot more about caution because markets have gone through to all-time highs. I'm aware of that, but there are genuine reasons for that. We are still largely range bound, and so there's a lot of kind of potential stuff. It's not even fundamental. Technically, there are some reasons to be cautious. So there's a level of resistance up here, a monthly level of 26,700, and then there's actually a new one here towards 27,200, up towards all-time highs there on the weekly at any rate. But certainly that's going to be worth highlighting there. So that's what I'm just going to do here quickly, is just highlight this little area that was a double top. And then we'll just see how price is this week. So this price action tells me it's very keen to attempt to go back up to these highs. If it fails to do that, so there's no real trading opportunities just yet for me. If it fails to do that, I could then see what I was talking about last week, where price starts to hit a bit lower. If it succeeds, it's going to encounter a lot more resistance in this area. And so if I then have a look, let's go back to the and let's have a look at the weekly. So if the weekly, all right, so last week we had a bit of a rejection candle, couldn't get over this line, and then we actually broke the low of that, but we have subsequently then produced a bullish indecision candle. So indecision, again, meaning that of course it can go in any direction here. I don't think the monthly is worth mentioning at this point, other than the fact that it is sitting at a monthly level of resistance, and therefore the outcome is genuinely could be either way in terms of that track record. Right, moving on to the S&P. Looking at the daily is actually a lot more bullish. I'm really quite happy to see that the S&P is so bullish. The area, the question, or at least for me, is there going to be some resistance in this area? Again, very bullish candles. In fact, it's been a pretty decent swing low, and taking everything else into account, and a new little level of local support. So overall, there's definitely a lot of buyers in this area, and so again, there's still that attempt. But at some point, we could, obviously, in theory, we will run out of, or from experience, we will run out of buyers, and then the weighting will shift. So, but for the time being, it does appear as though there's still plenty enough buyers and all-time highs sitting within reach. So a push up to that could also be on the cards this week, and so we'll take that in stride. The weekly, having it's now range bound, has not actually escaped the previous week's range, did not really break the low significantly, and hasn't broken the high, so that is still range bound, largely speaking, and the monthly looks relatively healthy. Going on to the NASDAQ here and having a look at this, let's actually go up to the higher time frame first. Let's go look at that monthly. So the monthly, as I said in previous videos, it's continuing on towards 11,000, 12,000 in this area. This is where I'm expecting a relatively healthy correction. Is certainly overdue. Looking at the weekly, again, very as bullish, in fact, but the only subtle difference here is we can see a bit of confusion here. A strong bullish follow through, move up. Slightly bearish candle comes in, price immediately recovers, doesn't even connect to the moving average, then stalls a bit, then follows through with a bullish candle, and now has produced two bearish candles. So it's a very subtle difference, but two bearish candles and another bullish recovery. It's effort. Basically what I'm saying is the market is having to push, and there's definitely buyers in it, but it's not finding a lot of ease. Every time it does it, there's a couple of, there's a seller's bar or a weak bar, then a buyer's bar pushes back, and then it pushes back a bit further, and another seller's bar, another seller's bar. So there's certainly some effort in this area. But in isolation, if I wasn't looking at the monthly, that looks really nice and bullish. Okay, but I would note this candle, these last four candles, basically all have their highs around about the 11,000 area. So we need to break through that to, confidently to see it head up to the 12,000 area. Until then, it could just simply consolidate until it does connect to the moving averages and then break out to the upside. So that is it on that weekly time frame. The monthly, of course, as I said, and the weekly is where it is. So that's kind of what I'm looking at there. It's all still range bound within on the daily basis. So I'm still looking to see it break up above that level, and then I'll be more bullish. Then having a look at the Russell. So this one has been range bound since 15th mid-July. Bit of an attempt to recover, but still stuck below 1500. And so really this week, same thing. Can it get above that, or is it going to break below that? So keeps looks pretty much within that area. And actually what I think is worthwhile mentioning here that's different is the monthly is coming back up into an area that was support or has been support and is potentially going to find resistance there. And that's slightly different from the others. Then moving on to the UK, and of course what's significant here is that, especially if we look at that daily, it is now broken to the downside, is in a downtrend on that daily basis, and has broken through support and is breaking previous lows. So certainly more bearish. So now we can see as we leave the US that there's a bit of a deviation away from that. The weekly has now produced a confirmed downtrend from a high to a low, lower high, lower low. So we're now in a downtrend. We've broken back below 6,000, and on the monthly, I think what's significant here is producing a swing high at 6,200, and we now have a swing high. So in isolation, this is bearish. This implies that the markets are going to head lower, and it's interesting because, of course, and that may well be, and again, I'm hypothesizing here, I'm not actually qualified to give detailed economics comments here. But if it is possible, it would be the different policies within different countries, and it's possible the US have got policies that allow their markets to be a bit more bullish, obviously. And then as we leave that, there could be different policies in other countries that would allow. But they tend to follow each other. What I find interesting now is they're breaking away from that. So looking at Euro stocks as well, now in a confirmed downtrend, lower highs, lower lows, starting to break through the previous lows, heading down towards, potentially down towards previous resistance and support levels. And then looking at that on a monthly basis, having produced for July, having produced so far quite a strong rejection candle below the moving averages as well. Not that it's necessarily finding resistance there, but it is certainly potentially finding some resistance at these key levels up here, which put that in at, what would I put that in at? Yeah, let's put it in at 3375. I'm happy with that. And then let me just mark that as a monthly resistance level. And so a break in the early stages of this month on the low of that could potentially imply that there would be, that market would be heading lower. The DAX, the same thing, it has at least done a weekly correction, so it's still in an uptrend on the weekly, has produced that bearish candle, but is also, interesting enough, has formed this indecision, potentially bearish rejection candle off these highs on the monthly. And so that could ultimately, looking back, be quite significant as a turning point. So again, I'll be looking for breaks of the low of the monthly bar. Then having a look at Hong Kong, same thing again, Hang Seng, bearish, potential bearish candle, certainly not strong, and a solid downtrend on the daily, but an uptrend on the weekly. Looking at the Nikkei, broken to the downside, strong resistance there at 23,000. Potential indecision candles, and again a potential for heading lower. So there's just this, as soon as we head away from the US, there are signs of certainly not as much bullish. But from experience, if the US markets decide to just push through and for the next 6 months they keep climbing, the other markets will in some ways either consolidate or follow through on that. Looking at the ASICs, the ASICs again produced a let's just have a look at that. It looks like a slightly lower high from the previous month. Yep, just about, if not the same, and also struggling there at 6,000. And so again, forming that, if we break the low, we could see these heading lower. So I guess recapping again for me, I'm gonna, if I was gonna trade anything, if I am gonna trade anything to the upside, it'll be the strongest markets, that will be the US markets. If I'm gonna trade anything to the downside, it'll be the weakest markets, which actually at the moment looks like the FTSE, and potentially some of the EU stocks that look weaker. So I might do some very cautious shorts to the downside. I'm not prepared to just assume that this is the beginning of the next big move just yet. It'll take several weeks if it does, so by next week I'll know a bit more. And again, we're within areas here where there's some very mixed signals and mixed trends. Uptrends on some time frames, downtrends on others, and therefore it just means more caution. But watching on the daily is really what's going to give me most of the information I need, is to see if we manage to recover, break outside and above levels, and of course if we break out, manage to maintain weekly lows. But looking at the monthly charts for the other ones that look more bearish, I'll be interested, and I think I could reasonably anticipate that they will break the lows and start to head lower. I can't really see economically that anything is necessarily picking up, and I think the Russell 2000 is also representative of that. It's a larger sample size of companies, and potentially that's why it's not looking as bullish as the rest, because it is starting to take a bit of strain. there we go. So that's my plan for this week is caution, as I said, bullish on the stronger markets, bearish on the weaker markets. So it's a divided plan. And if the bullish markets start to become bearish, then I'll certainly start to add into that kind of approach.